Hello guys, I'm Paris the Options Guy and welcome back to my channel. And again, as you guys can see, markets recovering from the day's low. As I said yesterday also, once after opening, we break yesterday's low, and if you see slow buying, you can go ahead and make bullish position over here. And if you see markets hit our first target of 44,000 in the end, right? But I actually went ahead and tried to take a call short position. Why? Is because if you see, I'll go into the 5 minute chart, and if you see, markets were seeing good buying, but I actually was expecting a way more faster buying, right? I wasn't expecting such slow buying to happen in the market throughout the day, right? So that's why I decided to take a short position over here. Why did I decided to take a short position once we broke this candle? Is because if you see, from where the market was taking support yesterday, now that zone could act as a very good resistance, right? And another thing was that markets had made the high of 43,900 if you see two times. So a lot of people would have gone long from here after breaking of 43,900. So definitely market had a good amount of liquidity, buying liquidity, that it could have gotten over here, and then we could have seen a very good sell off, right? And that's why I decided to take a short position in 43,700 C. But if you see over here, right, 43,700 C, do not take a look at all these other strikes, because it's just it's just nothing which is very important, right? Again, 43,700 C, as you guys can see over here, I've lost 860 rupees, 1.1% of my account. Not a very big deal at all, right? Because I know that when I will win, this 1.1% will really not matter, right? Because I'll get like 7, 8, 9% in one trade, right? So again, I gave a very small stop loss of 30 points, not a big deal at all, right? But what can we expect for tomorrow? Is that what can happen over here? Tomorrow, first of all, there is the expiry of, right? And definitely, if you are thinking that the expiry is going to be a one-sided up move from here, then chances are that you might get trapped again, right? You may think that, okay, the market is recovering from 2 days and now definitely we'll see again an up move. And sure, that may happen, but we will need to look at a few things before jumping to conclusions over here, right? Talking about Bank Nifty, if you see, Bank Nifty has been going up for 2 days, but if you see the buying, right, just see how the buying is coming, right? There is no strength in buying that we can see, right? So as of now also I am still bearish, right? How am I bearish? Is that maybe markets will again go down over here. Now there could be two things that could be happening, is that market will go down from here and take support and make sort of a double bottom pattern and then start moving up, or the markets could continue going down and break this important zone of 43,000, as I said, 43,700 to 500, right? This is a very important zone, and markets could break this zone. There could be that could be one possibility, or the markets could come down again, take support and make sort of a double bottom pattern, right? In an hourly chart, you can say, or even in a bit bigger time frame than 15-minute chart, markets could make a sort of a double bottom pattern and then start moving up. Because if markets recover from here itself completely, then there won't be a lot of new buyers who would have entered at higher levels, right? A lot of buyers have entered near 43, 800, 700, and those are also big institutions, right? A lot, like the amount of retailers that would enter at this point would have been very less, right? Again, we are not retailers over here. As I said, again, by name we are retailers, but we trade like big institutions, right? As I said today also, where nobody buys, you go ahead and take a buying position, and definitely you would have made very good profit over here, right? So what can you do for tomorrow? Very simple. First of all, tomorrow, if we open flat and start crossing 44,000, look for shorting opportunities from 44,100 to 44,000. Any sort of a shorting opportunity that you get near the zone, we take that trade over here. Our first target straight up becomes 43,800, and then our second target becomes 43,650. 680 to 700 on the downside. This zone over here, that's from where the buying has came. That will be a second target, but our first target will be 43,800, because there has buying has come for 2 days from the zone, so maybe we might again see a bit of buying, then maybe the markets might recover from here. But if we get any sort of a shorting opportunities from 44,100 to 41,000, we take that opportunity, and I'll also again do the same because the buying is not that fast. So maybe we might see another leg of down move, and then again we could see an up move, right? So why is this? Why am I saying you guys to take a short position? Is that first of all, if you see, a lot of people will get bullish as soon as we sustain above 44,000, right? A lot of people will get bullish as soon as we sustain above 44,000, and a lot of people stop losses are kept at 44,000, right? Because they might think, anybody who would have taken a short position today, they might think that okay, 44,000 will act as a very good resistance, and so I could go ahead and take a short position over here overnight, and maybe tomorrow after opening flat market goes up, takes everybody's stop losses. So market gets a lot of buyers over here from 44,100 to 44,000. Market gets a lot of buyers in the zone, and as soon as, if you do not see very good buying coming in from here, right? Again, if buying has to come, it will not give you a chance to enter on a downside. It will not make a formation that will tell you that the market is going to go down. If the good buying will come, you'll see very good green candles being coming over here, like being formed over here, and you will not get a chance to enter on a downside trade over here, right? Or you won't see a formation that says to you that okay, the market will go down from here, right? So again, any sort of a bearish formation or any sort of a bearish kind of setup that you get over here, you can go ahead and take a short position over here, because yeah, the previous day's close is also over here, so that will also act like a very good resistance, right? And then markets can easily go down, first of all, till 43,800, and then the second target of 43,700. Let's take the round number of 43,700. If markets open the gap up, right, then what do we do is that we do not take a trade over here. Because markets are opening with a gap up, people will be a bit more confident in buying, right? And that's why we could see a bit of volatility over here, because the buyers and sellers will try to fight over here, and that is when 44,200 comes into picture. Once we go above 44,200 and you do not see very good buying coming in, we take a short position over here, right? This zone that I had made in yesterday's video, I'll go ahead and extend it, and just mark this zone in your own charts also. I'll go ahead and actually reduce the zone a bit from there. Yes, just mark this zone from 44,000, maybe this 100-point zone that you can see. Once the market comes near this zone and you see any sort of a bearish formation, be it bearish price action or maybe any sort of a setup that you use, you can go ahead and take a short position from 44,300 itself, and then you can aim for a target of 44,000, right? That will be your first target. Then if the markets take support from 44,000 and start moving up, you can trail your stop loss, or you can book your whole quantity at 44,000. But if you want to, you can hold your targets for even 43,800 to 700 on the downside, right? If we open with a very big gap down somewhere near 43,700, right? 700 to 750, then we'll stay bearish. Why? Is because a lot of people who would have made bullish positions today, now they will get screwed over here. As soon as we open with a big gap down again near 43,750 to 700, any sort of a gap down above that, even near 43,800, will do nothing. But if we open the gap down near 43,750 to 700, then we'll wait for the first 5-minute candle. As soon as we break the low of the first 5-minute candle, we'll again take a short position over here. Our target will straight up be 43,500, right? That will be our target. That will be our only target over here. If you want, you can book some points at 43,000, book some quantity at 43,600. But I think if you open with a very big gap down, you'll get 43,500 very fast from here, right? So that is for Bank Nifty, and I have showed you guys what you can do for tomorrow, and that is how the expiry is going to be. I think tomorrow could be a bit of volatile expiry, but I think once the market traps someone, right, either on the upside traps the buyers or on the downside traps the sellers, then we can expect a pretty good move in a single direction, and that is when you can go ahead and make good money. Talking about Nifty, 19,460 to 480, you see this range, right? This range has now become very obvious. Everybody is thinking that as soon as the market goes above 19,480 to 485, we'll go ahead and take a buying position, right, in Nifty. And that is where tomorrow, not so much, right? I said yesterday that you can go ahead and buy above 19,480, but not today, because now this range has become pretty obvious. Everybody is going to buy, and that is something that you should never do in the market. Go with the herd, because whenever you do something that everybody is doing, then you'll lose money in the market. You have to do things that nobody else is doing, right? So again, what you can do in Nifty above 19,480, if you do not see fast buying coming in. What do I mean by fast buying? Is that something like this, right? If you see such good buying, this is a very good buying over here. As you guys can see, this is a good buying. And again, if you want to know what's a bad buying, if you see right over here, this is not such a good buying. This is a good buying. This is not such a good buying. If you see, right? And even if you see over here, this is not such a good buying. Again, over here also, not such a good buying, right? So if you see such sort of buying coming in over here, and even if you see a negative price action being made, anything, any sort of a bearish setup that you get above 19,480, you can go ahead and take a short position. So 19,520 to 19,480, you can say this 40-point range will be a range where people could get trapped, and that is where you can go ahead and make a short position. Your first target will be 19,440 again, 440 to 450, this closing price. And then your second target will straight up be 19,400 on the downside. Again, if market has to go, market will even break these lows tomorrow itself, right? If the market has to go down very fast to make a new low, you will see a very sharp rally coming in the market. If the market has to take support and make sort of a double bottom pattern, then you won't see these lows even being broken. And even if these lows will be broken now, you won't see very good selling coming in. So that these are the simple signs that you need to take care of in the market, and you can make very good money in the market, right? As I said, this is not the place where we'll buy. A lot of people other people will tell you that okay, you can go ahead and take a buying position above this place, right? But do not make that mistake, because it is a very obvious place, right? It is a very obvious place for the market to go ahead and trap you guys and then bring itself down, right? So again, that was if you open flat, or if you open with a small gap up, or just a big gap up or a big gap down, right? And then cross this level, you can, that's what I said. If you get any bearish setup, you can go ahead and take a bullish trade or bearish trade over here. If you open the very big gap up, right, in Nifty near 19,520, 540, or maybe even 19,560, 550, all these levels, then you wait for 15 minutes and see how the price action is in the first 15 minutes. If the price action looks like Nifty is holding itself, then you can go ahead and take a bullish trade over here till 19,600, right? Maybe you can wait for the high of the first 15-minute candle to be broken, and then you can take a bullish trade till 19,600, but keep your quantity less, because maybe market might get a bit volatile over here, right? As I said, we'll not buy in Bank Nifty, we'll buy in Nifty and we'll sell in Bank Nifty. So even if you want to make selling position, make selling positions in Bank Nifty, right? If you open with a very big gap down somewhere near 19,370, 380, even 360, all these levels, right? Any sort of a gap up of 100 points or more than 100 points, we will wait for the first 5 minutes. As soon as the low of the first 5-minute candle is broken, we'll take a short position. Our first target will be 19,320, and then our second target will be 19,280 on the downside, right? But as I said, do not sell in Nifty, sell in Bank Nifty, because Nifty might get a bit volatile on the downside as of now. If we see some sort of a change in Nifty where Nifty becomes more bearish, then we'll focus more on Nifty. But as of now, we'll focus on Bank Nifty if we want to sell, and we'll focus on Nifty if we want to buy, right? So yeah, guys, that was it for today. And thank you for watching till the end. I hope you guys like my analysis, and yeah, I'll see you tomorrow in another video. Bye-bye.